All right, so are you a gig worker that's looking to see if a C corporation makes sense for you? Well, let's talk about that a little bit. So with the C corporation, all of your revenue and all of your expenses go on a separate tax return, and that tax return gets filed with the IRS. That tax form is an 1120. You don't have to memorize that, okay? But the C corporation has to file a tax return on its own. The income does not pass to you, the business owner, and does not show up on your 1040 unless you're being paid wages from the C corporation. So it's not like a Schedule C, it's not like a 1120S if you take that S Corp election. But here's the thing, you're not able to just transfer funds back and forth quite as easily like an LLC or even an S Corp. Okay, so you can't just take distributions or anything like that. Anything that comes to you, the business owner, is going to be seen as a dividend. There are some caveats. You can make it a loan payment. You can also do it as some type of return of principal or something like that. But ultimately, you're going to be looking at a dividend. So the C corporation has its own tax liability. You as the business owner have a tax liability on any funds that come out. That's where you get the term double taxation. The C corporation is usually something that is set up for an entity that might be at about 200K, 250K minimum in revenue, and has a very, very high profit, right? Because that's going to be taxed at a lower rate. So that's why that's a more favorable tax position. But it's not always best for someone who's a solo entrepreneur and they're doing things on their own and the revenue is around 100K or so, and your profit is very little, right? It's just a big headache to have to deal with once you get to that level. So consider that. Consider looking at the S Corp. That could make sense. Or consider the flexibility of just remaining a sole proprietor. Guys, I hope that helps you. We'll see you next time.